Hello, my name is Michael Place, and I'll be presenting key insights and takeaways from the newly published BNamericas 2025 Oil and Gas Capex report. Latin America's oil and gas sector is recalibrating capital spending, creating a more selective but still fertile landscape for investors. The region's 24 leading operators have earmarked $188.6 billion globally for the year, slightly below the $194.5 billion allocated last year, according to BNamericas data. While this represents a 3% decline, it masks key growth pockets in the sector across several countries. In this new context, several Latin American players are doubling down on competitive advantages. Brazil's Petrobras is increasing capex to $18.5 billion from $16.6 billion in 2024, accelerating pre-salt development and solidifying its upstream edge. Chile's ENAP and Bolivia's YPFB are boosting investment to modernize infrastructure and stabilize output. Argentina's YPF remains steady at around $5 billion with eyes on Vaca Muerta and future LNG exports. These commitments signal confidence in national reserves and energy transition strategies. But while several state-run producers are reaffirming their long-term bets on domestic reserves, others are adopting a more cautious posture. Colombia's Ecopetrol, for instance, has flagged potential cuts of up to $500 million amid ongoing price volatility. The contrast highlights how divergent financial strategies and market sensitivities are shaping investment decisions across the region, with companies increasingly balancing growth ambitions against the need for fiscal discipline and adaptability. Ecuador's Petroecuador, meanwhile, is expected to invest slightly less than in 2024 as the government prioritizes private sector involvement to alleviate fiscal constraints. Mexico's Pemex represents one of the most dramatic shifts in approach, slashing capex by nearly 40% to $6.4 billion as it seeks to ease financial strain and revamp its development model through increased private sector collaboration. Of the international majors present in the region, ExxonMobil has the largest 2025 capital guidance with $28 billion, followed by Shell, CNOOC, Total Energies, Chevron, BP, and Equinor. Among the companies to have revealed multi-year plans, Petrobras has the largest projected annual outlay with $22 billion, ahead of Shell and Equinor. Taken together, the capex outlook reflects diverging national strategies shaped by domestic priorities, financial realities, and shifting global oil market fundamentals. These are just a few of the insights explored in greater depth in BNamericas 2025 Oil and Gas Capex report, which is available exclusively to subscribers via the BNamericas website. That's all we have time for in this video. Thank you for joining us, and we look forward to sharing more trends and analysis with you soon. For now, goodbye.